Hi, I'm Brett Scallan, and welcome to our latest quarterly update from Barwon Investment Partners. With me today is Jonathon Pullin, Head of Property Finance at Barwon. Hi Jono, can you please provide us with an overview and update on the Barwon First Mortgage Fund?
Thanks, Brett. The Barwon First Mortgage Fund is our flagship fund for our investors to generate returns from debt investments that benefit from first-ranking mortgage security over properties across Australia. The fund is available to our wholesale investors who are able to invest in the fund at any time. Many of our investors in the fund are seasoned investors in the Australian real estate debt market, and typically we find they are particularly attracted to our fund for a few key characteristics. Firstly, it is a true first mortgage fund, and what I mean by that is that 100% of the fund's investments benefit from first mortgage security. We do not have any allocation to mezzanine debt or other structured investments. Secondly, we focus on transparency with our investors. This is in respect to the investments within the fund, our management processes and fees, and also importantly, our valuation process. And finally, the majority of our loans are secured over either existing commercial property or land with improvements, as opposed to construction loans. This has placed us well in the current market, where we are seeing significant issues across the construction industry as a result of inflationary pressures.
Jono, you've previously mentioned that the returns of the fund have been increasing. What's driving this?
Like a lot of the market, we moved to adopting floating rate facilities as the RBA commenced lifting the cash rate this time last year. As a result, over the course of the last year, the percentage of our portfolio that benefits from rising rates has increased. If we look at last month's return, on an annualised basis, the fund is generating approximately 8.5% net of fees and costs. As a result of this, we recently increased the target return of the fund from 8 to 9% per annum, and it's been really pleasing to see the fund returns continue to strengthen.
It's obviously an interesting market currently. How have you and the team found the past few months, and what's your outlook for the coming quarter?
Over the past few months, we've continued to closely monitor the impact of high inflation and the resultant response from the RBA in raising rates. We continue to see the knock-on effects of this, with some developers under significant pressures on projects they have in construction and holders of existing property now needing to look at non-bank solutions for a period whilst their income coverage ratios are challenged. With this, we've seen a significant uptick in investment opportunity. But at the same time, it's increasingly important to select the correct loans that are best positioned to perform through a tougher environment. In response to this, we are actively making investments in residual stock and also existing commercial property, where there's a clear plan to improve the income profile over time. For the coming months, I anticipate it will be more of the same, with an increase in opportunity flow to non-bank lenders, who at the same time will need to maintain sound investment discipline to secure the best investments.
Thanks, Jono. For any investors looking to access our Barwon First Mortgage Fund, please don't hesitate to reach out to the distribution team here at Barwon. Thank you.